Good morning, or good afternoon to everyone, depending on where you're joining us from. We still have a few people logging in, so we're going to give them a minute or two to get settled, and then we'll get underway. Okay, I think we are ready to go. Thank you for attending our Global Plastic Containers and Packaging Sector Key Trends webinar. Today's webinar is being presented by Planet Tracker. Planet Tracker is a nonprofit financial think tank aligning capital markets with planetary limits. Planet Tracker was created to investigate the risk of market failure related to ecological limits, which are also called planetary limits. This investigation is primarily for the investor community, where these limits, other than climate change, are poorly understood and communicated, and certainly not well aligned with investor capital. Planet Tracker generates breakthrough analytics to redefine how financial and environmental data interact with the aim of changing the practices of financial, regulatory, and other decision makers to avoid environmental collapse. The goal of our plastics program, specifically, is to stem the flow of environmentally damaging plastics and related products that are creating global waste and health issues by transparently mapping capital flows and influence in the sector, from resins production upstream through to product use downstream. By illuminating risks related to natural capital degradation and depletion, investors, lenders, and corporate interests across the economy will be enabled to create more sustainable plastic products. But before I introduce our panelists today, first I'd like to cover some housekeeping tips. Today's webinar is being recorded. The recording will be made available afterwards. During the presentation or following the discussion, we invite you to submit questions or comments in the chat box on your screen. We will certainly try and address as many of these as possible today. If you need to reach me afterwards, please email or text. I'm always available to answer your inquiries, and we will follow up with all the questions you have submitted today. Finally, we are most grateful to you. We have over 225 institutions and individuals in attendance today, including analysts, investors, companies, and civil society from all over the world. Today, I will present the key trends that we perceive in the global plastic containers and packaging sector, and then ask our distinguished panel to give their views on some of the points raised. Today's panelists are all experts in their respective fields. Starting with Dawn Rittenhouse. She was formerly the head of sustainable development, responsible for leading DuPont's corporate sustainability. She is responsible for implementation of the 2020 Sustainable Development Goals, including tracking and reporting on progress. Helen McGeough is Senior Analyst and Global Analyst Team Lead, Plastics Recycling at ICIS. Before joining ICIS, Helen worked for 14 years as a senior consultant at Wood Mackenzie. Justin Q is an ESG analyst at Carmignac, which he joined in 2019. Previous positions include ESG analyst at Fidelity, sustainable investment and product management at JP Morgan, and roles in portfolio management at Schroders. Now let's get to the webinar. Between petrochemical companies upstream and consumer goods companies downstream is the plastic manufacturing industry. According to Bloomberg, the industry's 2019 revenue was $221 billion, and the industry included 669 publicly traded companies in 18 different sub-industries. As you can see on your screen, the industry is large and it is complex. Our focus today is the plastic containers and packaging sector at $56 billion in industry revenue. It is the largest sector in the plastics manufacturing industry, and this sector and its 5 sub-industries are what we are discussing today.
Gabrielle, just to let you know, we cannot see your charts.
Oh, good God. horrible. Okay. Well, that was properly embarrassing. Pardon me. We'll go from there. So our focus today is the plastic containers and packaging sector, because the sector's high industry-specific revenue and significant risk exposure. There are 223 publicly traded companies within the plastics, containers, and packaging sector. Out of these 223 publicly traded companies, we selected 76 publicly traded companies by screening them for more than $100 million in revenue in this sector and more than 20% of the revenue generated from the sector. In fact, 11 companies dominate the plastic containers and packaging sector. These 11 companies, at $60 billion in market capitalization, are responsible for 50% of the sector's revenue. These companies range in size from large cap to small cap. So who are these 11 companies? Who are their investors? What risks are they facing? Some of the companies we may know well, and some of the companies we may not know well. The top 11 companies ranked by overall contribution to the plastic container and packaging sector's revenue are Sealed Air, Topon Printing, Dynippon Printing, Amcor, Aptor Group, Huhtamaki, Berry Global, FP Corp, Intertape Polymer Group, Uflex, and Jindal. First, these companies in the packaging sector produce the hundreds of thousands of useful plastic products we use each day. But we also throw away these products every day, which are leading to the three key risks that we are going to discuss today: environment, legislative, and investment risks. When looking broadly at the whole plastic manufacturing industry, the industry as a whole, the industry has a significant and growing set of environmental risks. In 2015, the plastics manufacturing industry was responsible for almost 4% of global greenhouse gas emissions. The industry's emissions in 2015 were in fact greater than the cement industry, were greater than the aviation industry, and were greater than the shipping industry. The plastic containers and packaging sector also has a waste problem, which we all are quite familiar with. 11 million tons of plastic we use and throw away each year enters our oceans. Of this 11 million tons, 80% are from flexible and multi-layer plastics, the topic for today. Flexible multi-layer plastics are produced by the companies in the plastic containers and packaging sector. They're also produced by other companies too. In response, the three largest plastic markets globally are increasing legislation, which is materially impacting the sector. China has put in place legislation to ban certain categories of single-use plastics. These bans increase in intensity and quantity until 2025. The purpose of China's bans is to reduce consumption of single-use plastics, and the categories of plastics targeted by these bans include bags, tableware, e-commerce packaging, disposable items used in the hospitality industry, and other single-use plastics. Similarly, the EU has numerous policies in place too. For example, in December 2017, EU member states and the European Parliament agreed on new plastic waste rules. These rules include recycling 55% of plastic packaging waste by 2030 and improving extended producer responsibility mechanisms. These rules also set targets for decreasing marine littering and single-use plastics. The EU has many other policies in place. For example, the EU has also put in place an €800 per ton plastic waste levy beginning January 1, 2021. Countries such as Austria are rapidly enacting these policies. On the other hand, the US has a diverse set of municipal and statewide policies, but the US does not have any federal policy. Currently in the US, there are about 120 extended producer responsibility laws in 33 states, many of which include plastics. There are also about 300 local bag laws and ordinances adopted by 22 US states and in Washington, D.C. More interestingly, pending, there are many more possible legislation options in the United States. In fact, right now, on the desk of California Governor Newsom is Assembly Bill 793. This bill, recently passed by California's state Senate and supported by the plastic containers and packaging sector as a whole, will require all plastic beverage containers to contain 15%, 25%, and 50% post-consumer weight resin by 2022, 2025, and 2030, respectively. At the federal level, in this current Congress, we had 5 main pieces of legislation submitted that address single-use plastics environmental risks. Most importantly, the Break Free from Plastics Act was submitted in the US Senate and the House. It is similar in scope and scale to current legislation that's been enacted in the EU. In summary, these legislative risks can be described in 3 categories. First, production and sale. Second, consumption and use. Third, waste, circular economy, and recycling. These environmental and legislative risks translate they themselves into financial risks, or what can also be called transition risks. Let's take a look at each of these risks in turn. Starting with upstream trends, according to industry specialist ICIS, packaging uses between 20% to 80% of key plastic resins used to manufacture plastic products. Because these companies use these resins to produce the hundreds of thousands of products we use each day, investors may want to focus their attention on mitigating investment risks facing this sector. Also, these same 5 resins all saw resins global capacity increase from 2008 to 2019, with their respective compound annual growth rate at 1.5 times global GDP growth over the same time. Now, JP Morgan and many others are forecasting that plastics growth rate will decrease 67% to 0.5 times GDP, as plastics consumption begins to decouple from global GDP due to the risks discussed today. When Planet Tracker assessed if the plastics, containers, and packaging sectors described these same risks in the regulatory filings over the past 5.5 years, over 22 quarters of filings, Planet Tracker found that when reviewing 3,774 regulatory filings for these 76 companies that represent 87% of the sector's revenue, when available and when in English, these companies were clearly not communicating to their investors about the risks described today in the regulatory filings. Next, we have stakeholder pressure that is increasing. There are many different initiatives out there Today, we're only highlighting 2 of the many valuable initiatives out there. We have the PRI, Plastic Investor Working Group, with close to $6 trillion in assets under management. Similarly, in the United States, we have As You Sow's Plastic Solution Investor Alliance, with $1 trillion assets under management. Both are calling on industry to be responsible and address immediately these risks. Both are asking industry to transition towards a sustainable plastics industry. But that's not all. The companies in the plastic containers and packaging sector sell downstream their hundreds of thousands of plastic products that they produce primarily from those 5 key resins. They sell these products to the largest brands in the world, who increasingly have made material and time-bound commitments to decrease their own plastic footprint. These companies in the sector these companies the sector sells to are increasingly putting in place plastic containers and packaging rules that will impact and may limit the demand for the products produced by the sector. This translates into risks for investors. The top 20 equity investors in the 76 companies in this industry that represent 87% of its revenue have $23 billion invested. So one might want to ask, what are these investors doing to monitor? What are they doing to measure? And what are they doing to manage these investment risks? Similarly, the top 20 fixed income managers have $3 billion invested in the sector. As much of the sector, it's important to note that much of the sector is not financed through debt finance. It's important to ask, will these investors seek to renegotiate their debt covenants to address environmental and legislative risks as outlined today? Finally, when we look in aggregate at the top investors in the sector, we see clear concentration risk. 4 investors, well, 3 who are passive and 1 who's a sovereign wealth fund, own 15% of total industry equity and 9% of total fixed income exposure. They have significant concentration risk in the plastic containers and packaging sector. While their outsized exposure is partially because of their either being passive investors or sovereign wealth fund, from an absolute dollar point of view, at $11 billion, they still own a significant portion of the sector's risk. And as such, it might be prudent for these investors, the Vanguard, BlackRock, State Street, and the Sovereign Wealth Fund, the Government Pension Investment Fund of Japan, to consider enacting policies to mitigate these risks outlined today. In fact, when assessing potential investment returns to their investors and their beneficiaries on whom they're working for, investors have $6 billion currently in unrealized gains in the top 11 companies alone, who represent 50% of the sector's revenue. That is $6 billion in unrealized gains at risk unless companies begin to manage their risks, unless these investors ask these companies to begin to manage these risks. What happens to these $6 billion in unrealized gains if these 11 companies do not actively manage their risks, negatively impacting their social license to operate, negatively impacting returns to beneficiaries? What happens when these London companies are not able to meet the expectations of the downstream corporate buyers, who are increasingly putting in place policies to decrease their own plastic footprint? Will this increase these 11 companies' revenue at risk? So today, I'd like us to consider and discuss a set of recommended actions. First, we use plastics every day. Plastics are not going away. It's a necessary and important part of our lives. But it's important for companies today to take action. Companies' actions today will determine if their $6 billion in unrealized gains will be lost. What will companies do today? We want companies to publish time-bound plans to manage these transition risks, like any prudent risk manager would do. We want companies to explain their strategy to investors because their strategies are not being described in their regulatory filings. Same time, investors own these companies' transition risk. They own the risk, whether it's from pollution, environment, legislation, and investment. So investors have a duty to ask for companies' time-bound plans. Investors need to execute fiduciary duty by assessing regulatory filings. And if there are gaps in regulatory filings, following up with the companies directly themselves. Investors need to review their fixed income debt covenants. And investors need to assess the sector's investment risk to beneficiaries overall. It's really important that policymakers step up. Policymakers need to implement policies to mitigate this transition risk. They can legislate for simplicity and standardization of product design. With hundreds of thousands of products, how does one develop a recycling system or reuse system to manage those hundreds of thousands of products? Policymakers need to hold companies and investors responsible. Yet, at the same time, policymakers must learn from stakeholders, investors, and companies on how to improve industry. There's no one-size-fits-all model. So with that, thank you for listening today. Very grateful for your attention to this topic. I'd like to ask some questions of Dawn. So Dawn, if you don't mind, what are the critical climate and environmental risks facing the plastic containers and packaging sector from your experience in your career?
Thanks very much, Gabriel. I enjoyed the presentation, very interesting to see. So if you go back decades when the packaging industry really took off, it was developed for a number of reasons, but primarily to protect either products or people. So through shipping to the product from where it was manufactured to where the consumer would get it, or to protect, either extend the shelf life of the product or keep it from being contaminated someplace along the way. Those are still needs that we have. The plastic industry has grown so much in this space because in many ways it was a less of an environmental impact. It was lighter to ship than glass or metal was. It had lots of benefits from that standpoint. And because of the growth of it, was able to be ultimately cheaper, which again helped consumers in terms of the impact on that. So as companies are trying to figure out how do you look at the impacts, you're trying to balance the side of the benefits in waste reduction, food loss waste, and that you get from the use of plastics packaging with the ultimate end use issues of plastic waste ending up in landfills or worse in the oceans. But also the impacts, obviously, of the production of plastics through the whole life cycle. Clearly, one of the key areas that the industry has decided to pursue is how to improve the whole recycle and recovery aspect of so if you can keep the plastics in the system by having an efficient way to collect them. Plastics degrade if you just keep melting them and trying to remake products. So it's hard to set up an endless loop of collecting plastic bottles and making them back into plastic bottles. But there are ways that are being explored as well on how do you to actually take the plastics back to their basic raw materials and remake plastics. So in essence, you have first quality recycled containing materials. And traditionally, that's been an area that has a lot of environmental impact. It's a big energy user to break up a polymer back into its components, but there's new innovations that are coming into the space. So again, I think companies are thinking about this probably late into how they should have been thinking about this globally. They clearly are going to need policymakers to support this. It's going to be really important to have that drive from the regulatory legislative side that drives a better collection systems, better reverse distribution, and those if they're going to make progress on their objectives to reduce the ultimate impacts of plastics.
Do you see what are the key options for the sector to mitigate and reduce its climate environmental risks? Like what would be policy angles you might suggest that policymakers consider?
Well, certainly the drives towards mandating plastics be collected, compost opportunities will also allow for the use of non-fossil based plastics that can then be go back into a composting system. But being able to collect them or require some level of plastics go into recycled content will also help drive the industry. One of the key challenges is that the plastics industry, the virgin plastics industry, has had decades to get as very efficient in terms of a cost standpoint as possible. And so it's hard for these new approaches, whether that's, ocean collected plastics or these plastics that have gone back to their basic monomers and been put together to compete. And so you need to even the playing field in some ways by having a more cost competitive opportunities for these newer innovations until they have the time to really develop to the point that they're cost competitive without it. So much like the renewable energy industry started off with subsidies and some rebates going towards solar and wind until they got so that they were cost neutral with grid electricity. You're going to have to, and you can do that two ways. You can do it through, increasing the cost of fossil-based plastics, virgin plastics, or some kinds of rebates towards those organizations that are trying to drive these newer solutions so that they can sell them a more cost-competitive way.
Yeah, that's similar to the 800 euro per ton waste levy that's being enacted in the EU starting January 1.
Right.
Okay, interesting. Do you see any difference in the type of feedstock around the environmental and climate challenges, whether it's high density polyurethane or polypropylene or PET bottle grade? Or is it generally more process?
Certainly, rigid packaging like polyester bottles, high density milk jugs are easier to collect. They're virgin material. I mean, they're just monomer materials, so they're generally haven't been blended with other things. If you can find ways to collect them and be clean, I mean, they are being used. Things like I own my Rothy shoes made from polyester bottles. So if you can get a good clean recycle stream, then there are ways to do that. And those can be easier for a consumer to identify. You know what a polyester bottle looks like. You probably know what your milk jug. The complexity really comes either when you get to more flexible packaging. And over time, many companies have driven to flexible packaging because it weighs less, it's shipping better. So from that environmental standpoint, it's been good, but it's much harder to recycle, for the consumer to clean, for recycle companies to be able to do anything with. And then there's multi-layer plastics. I mean, in the US, think, the ketchup bottle is actually about 5 layers of plastics, and about the only thing you can do when you get lots of different plastics is grind it up and make something like plastic wood. You know, that's a small market. I don't think the world needs billions of pounds of plastic wood going in and out. But so you also have to balance, you know, how hard is it to recycle with, can you put it back into a market? I mean, ultimately we'd like to figure it so it goes back to the same type of market so you can keep those molecules in the system much longer.
Thank you. That's really interesting. Well, Helen, I'd like to ask you a couple of questions if you don't mind. Considering what we've discussed today, what would you like policymakers do to enable better recycling infrastructure in the US, in the EU, and in China?
So, you know, markets individually are very different, and the tools they use are very different. So, as you've mentioned, I mean, EU, very regulatory driven. And it's already, you know, policymakers are already putting things in place through the circular economy strategy. So you touched upon the fact that, you know, there are targets now, not just for recovering plastics, but recovering plastics for recycling. That the plastics should, you know, be 100% recyclable by 2030, and so on and so forth. So that there are steps coming in the European region that are looking to progress that circularity and really achieve that circular economy. That's their ultimate goal. That's not, you know, it's going to present challenges to the sector to actually achieve that, but it's certainly setting them off in the right direction. I think one of the things that permeates the whole sector is the lack of standardization. So, you know, what you might purchase as a bale of one type of material, one market will differ very much to a bale in another market. So there is a real lack of standardization, and that is something that would bring about a lot of progress, because we could actually compare apples with apples, understand what we're buying, understand the prices that we're paying for this, and understand the capabilities of those feedstocks, and therefore which routes they can go down, recycle, reuse, anything else. So I think, but for government to actually be able to do that, policymakers, that's quite challenging, and that really does, I think, need to be industry-led more than anything. But I think you can see that sort of the rate of progress and without sort of targets, without that drive. So if we do look at the Americas market, where there is no, in the US in particular, where there is no federal regulation, as you said, it falls to state, it falls to city, and whilst there are progresses being made, it's almost piecemeal in the scale of the whole market. That's one challenge that needs to be overcome. You know, a comprehensive piece of regulation can go a long way to focusing the mind throughout the industry and throughout the chain. You know, in the absence of anything else, because obviously regulation isn't the answer for everything. We've seen in Asia that markets have worked very well in terms of recovering plastics for reuse. If we take the PET example, huge fibre industry there, huge consumer of recycled PET. That demand that was there generated the activity for collection, and that system worked incredibly well, even on an informal basis, nothing to do with regulation. But of course, then you see things like, you know, the change in the regulations on the imports of plastic wastes, that had an impact on the market. And then, of course, coronavirus this year and the impact it's had on the informal sector and the sort of the vulnerabilities that are there in that sector. Again, that reinforces some of the fragility of the chain. So I think regulation really does need to be there, and it needs to have a role. One of the challenges for sort of the Asian market in particular, and talking to friends as we do, is, and even other elements of the chain, is how they can actually achieve greater reuse of materials in the market when the regulations aren't there permitting the use of recycled plastics in food packaging, for instance. I know food packaging isn't the be all and end all, but just looking at that as an example,
Yeah.
Without that policy to allow that to happen, that does have restrictions on the progress that can happen. So I'm not saying everybody has to jump into it, but certainly regulation can be absolutely enable and push people in the right direction, and industry in the right direction of what they want to achieve overall. But also the lack of it can be an inhibitor to progress. So I think it's setting those goals and setting everything in the right direction is critical. And I think that's where the EU, whilst not perfect by any means, is a good illustrator of how regulation can enact some change. And Japan is another example. If you look at that, particularly sort of the cultural aspect of, if you're told to do something, you do it, and everybody follows suit. And you can see progress made by having that regulation, having that guideline, having that specification to follow through is really impactful.
That's really interesting. Do you mind explaining a bit more, Helen, about the food and container waste policies and reuse constraints, so our audience has a better understanding? From what I know, locally it's 95% in the EU, but I think so everybody can have a better understanding. I think it's a key body.
Yeah, so one of the barriers in Asia, for instance, is that a lot of countries do not permit the use of recycled plastics in food applications. So therefore that market can't develop. And obviously if we think about plastic and plastic packaging, the predominant application is quite often food packaging, food beverage packaging. So immediately you're restricting the capabilities of getting any circularity in resources there. If we look at the European example, we have a lot of regulations. So one of the stipulations in recycled plastics in food contact applications is that the feedstocks coming into that must be a minimum of 95% containers having been in food contact applications originally. So immediately that presents challenges if you think about more sort of the polyolefins markets, where a smaller proportion of the overall usage is in packaging, food packaging. So when you actually want to then recover that material, want to actually use that material again and have recycled plastics going back into food, it's actually more challenging to get enough feedstock to meet that requirement. So that's one of the particular stipulations that there are in food contact. Every country may approach it in a different way, but FDA in US and a similar model in Japan and the EFSA system in Europe are sort of examples to look at in terms of how processes get approved for this. And there are quite strict stipulation, particularly in Europe.
Yeah, the three processes are similar, but they're not coordinated. They don't have the same outcome.
Yeah, that's another aspect.
It creates a significant risk for an investor such as Justin. So Justin, asking you, what are your thoughts? What would you do as a fixed income investor facing the plastics dilemma we've highlighted today?
Thanks a lot, Gabriel. I think you did have a good presentation. And I think all the points that Dawn and Helen mentioned is certainly a very valid point that we think about it. I think as investors, whether it's fixed income equity, like the house we do, or anybody else, it's about understanding how does all this legislation going to impact the company themselves. And even before that, actually, ask ourselves a very key question here. I mean, where does the legislation comes from? It usually is about knowing the societal pressure that pushes pushes the government, which then pushes the company. So as a fixed income investor, you start to think about all these regulations that's coming in. That's the first step in terms of how is that going to impact the company. So we're looking at things like the plastic taxes is one element of it. But you also got other elements in terms of the import taxes or the import standards that has to come in. So that's on the regulatory side that comes in. And then the second thing to think about is, as a company, how does this affect their customers and consumers? Now, the point about from the regulation that I mentioned, things like the taxes, for example, some companies are able to pass those to their end consumers as a cost, as a price that they pay. However, how much, to what extent can they pass on? Because if company A pass on the taxes to consumers, and company B doesn't, and then company B is innovating, then company B may actually be getting more customers buying from them because it's cheaper and it's greener and it's cleaner. So the societal pressure side, that has its effect on the company. And then the third thing is about whether the company is able to, from a reputational perspective, are they able to get a premium from selling the products, or are they by selling non-plastic products or sort of the cleaner product ranges? So there's just all these elements that we need to think about as investors, and unfortunately there's no sort of black or white scenario. It's all these different aspects to ask questions about when can the company be not able to pass the cost down, how will this impact their financial statements over the longer term, and by when they will be impacting them.
That's interesting. What did you think offline about the regulatory risk analysis that we did? I know we were quite surprised at the moderate level of reporting by the companies that we assessed, the 76 companies. Obviously, it's not a perfect process, but just it's very interesting to see that, because I would think as a fixed income investor, one would want these companies to report on, or begin to report on some of these regulatory risks, so they can own them, and then therefore, you can manage towards those risks. Do you have any thoughts on that?
Sure. I mean, I speak to corporates quite a lot. So corporates that they are involved, whether any types of corporates, but I can just sort of lay some examples here on the consumer goods corporates that has met the ones on your slide, that has met all these pledges by 2025 or 2030 to be 100% recyclable, compostable, reusable type pledges, yes, which a lot of them do sign up to the Ellen MacArthur's foundation plan. However, one thing that always struck me is the elephant in the room hasn't really been disclosed. They tell you that they are committed to all this, but the track of progress is not there. That's the first thing. The second thing, which is the most important thing as investors, is how are you going to get there? And what if you don't get there? Interesting enough, I asked a couple of corporates before. I say, what happens by 2025? You don't meet any of these pledges. And the usual response is, then we will come up with the new pledges before then, and then issue a new statement. And then when I ask them, so all these pledges, how much does it cost you? What's your CapEx spending? How do you think about your IRR return as you think about retiring from some of this plastic production and feedstock, and then coming up with a more sustainable packaging? How much does it cost you? What does it mean for you? So, well, it's negligible. I was thinking, how can that be negligible when you actually need to spend money? Because if everyone's asking for the same product, and if feedstock becomes a challenge, how can it be a negligible amount? And also, you need to spend R&D, because like the point that's been raised just now, that plastic has its merits in terms of, for example, food packaging, to keep food fresh and importing, and also lightweight, all those things. But if you're going to move away to something different, there is a challenge about researching and spending money on R&D and come out with a different alternative. So no companies actually talk a lot about this. And what I find interesting is a lot of these investor meetings that I sit in, or these ESG investor meetings, people are generally happy when there's a target, but nobody really asks the question when it comes to how much you're going to spend, what does it mean, and how this is going to change the outlook, and how into positive or negative. So no one really asks those questions. And I think that should be the question that we should be asking the company. How are you going to meet all these targets, and then hold them liable to it? Every time there's a meeting with them, ask them the question. And I just want to sort of finish out on one point of that one, is that I think last year, I only see one publication last year, which was published by the Financial Times, looking at all these companies that made the pledges and then where they are as of today, or as of last year. So it was a year after they made those pledges. And then they barely made any move. And then you start to think about the fact that they only have 5 years to go to ramp up. And so it's either they're going to ramp up very quickly towards the end, or things change, or they change their pledges, because those are just pledges and no one's going to hold them liable to it. So that's all those things that need to be, as investors, we should hold companies liable to it, and then really press on the progress. Because if company tells you that we will generate 3% growth, you chase them now as investors. You chase them every quarter, say, how far are you from the 3% growth? So why are we not chasing them on their pledges when it comes to all these big monumental pledges that gets a lot of PR, but they don't really do enough?
That's quite interesting. I think, Helen, I'm going to ask you some questions here on supply and demand and on recycled PET and other recycled products. You see this on the ground, and you've been looking at this on the ground for 20 plus years. Can you provide some color on recycled product and supply and demand?
Yeah, I mean, and it's an excellent point from Justin. And, you know, having looked at recycled PET for a number of years,
Yes.
I remember targets being set by some of the major beverage brands way back when, and yeah, every year didn't achieve it in one way or another, and it just got rolled over or recast in some way, and there was no accountability in the true sense. So absolutely a vital point. I think the environment today, the scenario today, should I say, is very different insofar as there is a lot more accountability expected from these brands, particularly. I mean, they, you know, if you look at the European targets of 25% content, recycled content in PET bottles, 30% in 2030, we've seen all the brands go beyond that. I mean, we're talking on average 50%. But working the statistics as we do, I mean, we do a survey directly into the recycled PET industry in Europe. Collection rates are growing on bottles, so you immediately got a supply constraint going on that. So the collection targets under Single-Use Plastics Directive coming from EU is going to be challenged to meet in 2025. If you're not getting the feedstocks through, how are you going to be able to convert that into a food-grade recycled PET pellet to supply all of this? So we're seeing demand way above supply. Based on 2018 consumption of food-grade recycled PET, we would need to triple the usage by 2025, which means growing the supply by 2025, because that maxed out all the capacity that was in the market at the time. And we're not seeing the rate of growth in that capacity. So the 2025 targets, I think, are going to be extremely challenged to be met. Now, what are the repercussions? Absolutely, that's the question. You know, consumers certainly may hold them to account and may walk away from them if they're aware and conscious about environmental issues. Everybody's aware about plastics pollution, but, you know, will they show with their feet by walking away from buying those brands' products? That may be one aspect. So therefore, the shareholders should be asking the question of, you know, what's going to happen if this target is not achieved? Leading back into the point Justin made about, you know, Ellen MacArthur Foundation, you know, being a data hungry analyst as I am, you know, looking at their latest reports on the progress a year on, and absolutely right, so many fields were just left blank. So we cannot see what progress is really being made in public terms. So we know that there are huge challenges there in the supply. At the moment, the statistics do not stack up that these things can be achieved. I think 2030 is a different scenario once we get some other activities going in Europe in terms of deposit return schemes coming into play. That will allow more investment in capacity, and therefore are more possible. But absolutely, I mean, and we don't even know what the EU will implement as a repercussion on the failure of countries to achieve the targets that have been set. So we're not clear on that. But I think there will be some serious repercussions, if not financially. It's going to be damaging to the businesses if they don't. But, you know, this is also why we see, you know, there are limitations in mechanical recycling, but this is why there's also a massive focus on chemical recycling, which I haven't really touched upon, but I mean, that's new, and that's also opening doors perhaps for the polyolefin recycling as well, which is extremely challenged in achieving anything really. So
Dawn, how would you take these two different inputs, you know, the one on is reputation risk material, and how do you one hold the companies accountable from a financial perspective? And I then, you know, presented by Justin and Helen's comments on how do we hold companies accountable over this, you know, towards their targets. What do we do at a large corporation? What would you suggest?
So there's always a balance as you're sitting on a company saying, what kind of commitments should we make? And there's huge pressures, obviously, to go beyond business as usual if you're going to make a voluntary commitment. So just going out and saying we're going to be compliance with whatever is regulatory required is actually probably a negative for for a lot of these big brand companies. So it's that balance to say, if we're going to go out beyond, is it forcing us to think about things differently, to Justin's point, think differently in our R&D organizations and stuff like that. And you don't want companies not to be very aspirational as they're making their commitments, because we're not going to make the progress we need as a society. So the things you need to be looking for, and Justin talked about this, like, what are you investing in? How are you assessing different innovations that are out there? How are you working with communities, with the public, to be able to collect more, if that's the kind of commitment that you need, to get the access to the raw materials that you need, to get technologies in place that get you clean raw materials that you can actually use. We used to bring back high density milk jugs to make Tyvek for envelopes for the mail. So not a huge, I mean, it has obviously some performance characteristics, but it was probably the lower end of the performance needs for Tyvek. There was so much contamination, which we meant there was like 0.05% contamination, which shut down our operations regularly. And ultimately,
contamination is both food and also other chemicals and additives.
Yeah, paper from labels, another plastic that somehow got into this. And now, granted, making Tyvek is a very sophisticated process, but I mean, so these companies are going to need to invest in what are the technologies to ensure that we get, really clean sources of raw materials. So I think what you need to do is challenge the companies to make really as aspirational goals, but then then hold them to task on, are they actually investing in trying to achieve those? And then ultimately, if they miss them, have they gotten further along? Then they have just set a business kind of commitment.
Well, so Dawn, then playing a bit of devil's advocate, a company makes an aspirational goal, that's great, and it misses its goal in Q2, misses its goal in Q3. How do we keep Justin from jumping ship and moving his billions of dollars elsewhere?
Well, and these are the kinds of goals that it's not Q2, Q3. These are long-term goals. I mean, companies are setting 2025, 2030 type of commitments for these kinds of things. But if you're seeing no evidence that the company is actually investing in this space, and that they're trying to look for different, newer solutions, after a few years, you'd say, is this company serious about it, or are they just trying to drive, some kind of greenwash, blue wash approach in the short term?
Yeah.
So, but that does force a dialogue between the company and the investors on understanding how are you really looking to achieve your commitments.
Yeah. Do you think, Helen, the companies have a good view, an accurate view on the recycled, forecast for recycled product on a quarterly basis? It's hard, for example, as a layperson, if someone types in recycled polypropylene to get accurate prices and total supply and demand projections on a quarterly basis. These things one has to go to the specialty press to find this information. How do companies do that?
I mean, this is, obviously this is part of ICIS business, but it's part of our ambition as well, is to help give more transparency to the market. And that's why you need that pricing assessment, so that you've got an independent view on what the pricing is. It is a specialty, as you say, so you would need to go to those companies to be able to get that information, because again, we're in an industry that there's a lack of specification or standardization in those specifications. So you need a good, robust methodology, so you understand what you're actually grading under a particular price range. And so that's very important. But transparency is important, because that takes some of the volatility out of the market, which we know recycling can be susceptible to. So it helps the market trade more efficiently, if you like, in terms of understanding what the pricing dynamics really are in a market, and that's why it's important. And that qualities are there or thereabouts within that, because obviously there are a range of qualities available in the market, but you can have an assessment of a truly usable material in the market. So it is quite important to have that there, and it allows because quite rightly these aren't short-term goals, these are long-term goals, and if you start looking into what the agreements are in terms of supply, in recycle, it's a minimum 12 months, and particularly getting into, if we look at the Europe example again for food grade recycled PET, some of those agreements, because of the ambitions of those brands, ultimately those contracts are extending into 2-3 years, which has never really happened before in recycle. But it's about securing supply, it's about negotiating that price so that they can build that cost into their business. So pricing is pretty key to being able to commit and remain viable within this sector.
That's really interesting. So Justin, how would you segment the winners and losers in this industry? Would you deploy your capital as a equity investor, understanding your beneficiaries' approach towards risk and return? Where do you think we'll be in 2025?
Well, I like to think that by 2025, people stick to their pledges, and then I think we wouldn't be discussing too much about why a company is not doing enough, but I think we'll be in a position to discuss more about what are the nicer, cooler technology that we have than saying why we should be doing this. I think that's the ideal aspiration side. But for me, separating winners and losers is not exactly the easiest. I think like we sort of talk about this, is because there's longer time horizon, and at this point in time, everybody's making very bold pledges, but nobody is showing enough the progress and how they're trying to get there. I think giving another year or so, that we should be able to start to see a bit more in terms of what companies are trying to do in terms of trying to get to their goals and the challenges they face and how they're overcoming their challenges. And then from there, we could also try to understand a bit more the changing consumer trends. How are they addressing the changing consumer trends? So it's almost like, do the companies actually know the challenges when it comes to the supply chain, but also the challenges from the consumer side? And what are they doing about this to position themselves for the next 5-10 years, so even longer down the road? And that will be the one that will help us understand which company do we want to allocate capital to. I mean, we are not investors with infinite capital. We will allocate to the winners, of course. And then when we allocate to the winners, it's not about allocating to the next quarterly winner, but the next 5-10 years winners further down the road. So if you've got two consumer goods companies that are one is doing much more than the other, we will rather allocate capital to the other, even though as of today, they may be spending more on expenses because they're doing more R&D, but for the longer term, they are much better positioned to address the marketplace and also mitigate the risk from license to operate or taxes that comes to it. When you got other things like the apparel company as well, as you sort of see, like right now you see the likes of fast-moving consumer apparel companies. They are also trying to address the whole apparel issues, because you want cheap clothing, you want it to be fashionable, but a lot of it has some form of synthetic that goes behind it. So how do they address this? How do they reduce waste? So there's all these questions are being asked, and some companies are doing a bit more than the others. And the ones that are doing a bit more, actually, we started to see people are susceptible to buy from them, because as companies do spend money on R&D, and then they bring the volume up, they can bring the cost down, and that's actually good for the company itself, versus some other ones who are still saying it's a problem, they have no idea what to do with it, then gradually people will stop buying from them.
That's really interesting. Let's say, I think right now, if you don't mind, we'll pivot to some of the questions that we're receiving. We've got about 20 questions. I'll start with you, Don. What do you think about, just if you could spend a minute or so, do we need to have a global treaty, like the Montreal Protocol, the UNFCCC COP, or CBD on plastic and plastic pollution, but obviously on plastic production?
Obviously in an ideal world, you would say yes. I think that the plastics packaging industry particularly resembles closer to the challenge of what we saw with climate change, because it's so complex, it touches so many things, versus the Montreal Protocol, where you had 5, 6 major companies that you really needed to get to buy into the commitment. Here you've got so many more, and it's seen much more by the consumer. And so I think to get that momentum going, you're going to have the same rallying cry that we came up with, 2 degrees and 1.5 degrees, that, on climate change. And I think, I'm not sure we can wait for the time that it will take for this huge UN brokered agreement to get in place, just like the challenges with climate change. We may have to deal with the lots of different kinds of processes going on in different regions of the world, which ultimately hopefully allows for the most innovative, best solutions to be developed, and move around the world from a more market-focused than a regulatory legislative kind of thing on a global treaty. I'd like to be wrong on that, but I'm just not optimistic that it could happen in the time frame we need to see this change happen here.
Well, the market's also possibly quite a bit different. I mean, you have hundreds of thousands of products. I think the model that JP Morgan has suggested on the decoupling of the traditional 1.5 times plastic growth to GDP to 0.5 times, a decrease of 67%, is quite interesting, given these constraints that we're discussing today. Yet at the same time, if you have standardization of product and, with site-specific investment in recycling infrastructure, not everywhere, but in certain places, in certain nodes, there could be some real advantages to growing out and improving the supply chain and decreasing risk. Helen, do you have any thoughts on, can we use the recyclability of plastics in general into other products like home building materials?
I'm not an expert on that material, but I think there is a place for assessing, applying the circular economy model or principles to any market and application. I mean, ultimately, there is all this focus on plastics, but this needs to be holistic in our own whole life. If we're looking at the climate crisis, if we're understanding that we're all consuming 3 times the world's natural resources, and we need to actually change what we're doing here. I think there is every application needs to assess what it can do in terms of reusing its own material, but absolutely, yeah, and tangentially, what could be used in different applications. So we do focus a lot on sort of closed loop recycling within plastics, trying to get bottle to bottle in many instances. But we've already seen in different applications, again, because it's my experience of PET. I mean, there are so many different applications that use the recycled PET, and that goes into fibres, that goes into strapping, that goes into sheet for thermoform trays, and you can actually, it has the characteristic properties that it can work in lots of different applications. So I think it's worth exploring what recycled materials can be used in different applications for sure. I can't answer that specifically. I don't know the characteristics that performance that are required, but I think there's certainly potential. And we've talked about the plastic lumber and these types of things are possible. But I think we need to actually look at we've talked about the proliferation of plastics in our everyday lives, and the great size of the whole sector. But actually, we should perhaps put some of that onus and responsibility on those producers. Actually, you've got the technical know-how. Assess what can be done as alternatives, thinking outside of the box, getting out of the business as usual, and what else can be done. And I think the sort of the coronavirus pandemic is also another example of that, where we saw lots of different sectors, and it wasn't a massive shift, but actually diverting change to actually producing the hygiene and sort of other products that were needed through the peak of the crisis. There has to be flexibility in this, because I think if we put barriers up, constraints, then this is destined to fail. So I think we should be thinking quite literally outside of the box as to what we can potentially do.
Do you have any thoughts, Justin and Helen, on using a parallel from the carbon markets, a plastic credit for either reduced plastic pollution or reduced consumption or improved recyclability, and how that would be function as a feed-in or a revenue generator for transitioning to better technologies?
I'll just jump in quickly, Justin, on sort of, if you look at the taxation that's going on in Europe, I mean, it was mentioned a bit earlier about, do we penalise sort of, or to reduce the use of virgin materials, do we actually put a tax on it, or do we incentivise the use of recycled content in it to encourage that activity? I know that's one tool and only one mechanism that's going there, but I see some lack of joined up thinking in some of that as well, in terms of what, and the EU waste levy that you've mentioned. I mean, those funds aren't going back in to that supply chain, into investing in the waste collection and sorting. It's actually going into the coffers of governments, because they're all trying to cope with things like, the huge costs of COVID and supporting their population and industries. So I think it falls down a little bit. But in terms of specifically the carbon model, I think I'll let Justin speak more. But I think that there is something that could be explored there, because I think one of the things we kind of miss in this whole discussion is the reaction. There's no disputing there's a pollution crisis from plastics, absolutely, and it needs to be addressed. But there is the question of the reaction of a lot to knee-jerk reaction to going to other materials that could be more carbon intensive in terms of the energy it's used, the emissions that it makes, and carbon emissions. So I think there has to be a model in that vein taken on board, because quite often plastics is a better choice material in certain applications because of those benefits in terms of carbon saving over other materials. And I think that's got overlooked a little bit. But Justin, sorry about you.
I agree with what Helen said, actually, because that's exactly what happened with all this plastic tax that has been collected. Even in the UK itself, I think a majority of that money has actually gone to the Treasury, as opposed to helping with innovating or supporting the transitions outside of plastic. And I think before I sort of answer your question on this sort of plastic sort of credit type of thing, I just want to sort of just one point that you sort of raised about the UN side of things. Again, it's the same thing as when we look at climate, and also the same thing as when we look at the whole general ESG side of things. It's about understanding what societal, which is the key stakeholders, really want. Because when it's a key thing for the society, it becomes material to the company. Because the society side will drive the regulations to accelerate regulations to come in on companies. If you start to do an aspirational thing from a UN side, you'll take years, and then you'll take countries to figure out how to implement it. And then by the time that sort of administrative is done, it'll be 2030 or 2040. We will definitely have more plastic in the sea than anything else you can find in the sea now. So I don't think so. I think the consumer uprising side and then the demand side would actually push that. But of course, that will obviously give the pressure to corporates to think about this a bit more. Now, your question about the plastic credit side of things, there could be potential some form of structure in place, but mind you, what has happened to the carbon market side hasn't really been that effective or efficient as we have seen. So to try to create similar type market again, I'm not sure how quickly we can really establish a system that will work, that will actually help to reduce plastic waste. I think it really is worth from the governmental and policymaker side to think about this from an entire system perspective. I mean, very simple. In the UK, for example, we don't have common waste collection in the whole country. even in London itself, like where I live, every single borough will have different ways of recycling. Some will put it in the blue bin, some will put it in a bin bag, there's a transparent color. And then however the council sorts the rubbish is different. So I think there is a bit more ecosystem that the government has to try to fix that to get some form of consistency before implementing some form of plastic credit. But I think for corporates itself, to think about it from an investment standpoint is you really come back to the point to think about how are the corporates innovating themselves and while being able to still attract their customers and also how do they manage the supply chain risk? Because there's no good if you wanted to have a very clean biodegradable plastic as your packaging, for example, but it costs a lot, which you have to end up passing to consumer. And when you have and consumers are very price sensitive, and when your price increase too much, people rather pay for it and say, "Oh, it's actually not my problem. Somebody else will deal with it." So I think it's about getting the right pricing point and go from there. So I think some form of credit will be interesting, but I wanted to see how that plays out because carbon, we still haven't quite figured out the efficient way of doing it yet. I mean, the new one's coming through. We'll see how that plays out, but I think it will take time.
Interesting. What do the four of us think? This is an open question for all of us, obviously, to dialogue about now. What does an investor stakeholder policy look like? You know, I'm at one of the four firms that we mentioned that have a concentration risk in the sector, hypothetically. And what do I tell my risk manager and my portfolio manager and my VP or SVP that should be an appropriate sort of a plastic strategy for the containers and packaging sector? Do you have any thoughts on that? I mean, one thing is to consider actively including R&D spend, research and development spend on innovation, if it can be broken down to that specifically into how we score companies. I don't know, the three of you have any thoughts? What would be the appropriate investor response to the $6 billion of unrealized gains?
Well, let me take a first step on this one then. I think it's a bit similar like climate and carbon as well. So this is when regulation comes in place. That's the sort of first step that you can price. Because for us, it's like you ask a question about how does this actually affect the price of the bond securities or the share price? And then you go down the route of asking, okay, what are the factors that will affect it? So the easiest way to actually model is to look at any regulatory price that you cannot pass on to any consumers. And you try to figure out, okay, what this is going to be incremental cost to the company, and this is going to affect their cash flow in the future. That will be the sort of conversations to have in terms of what the managing risk. But of course, as time changes, because like I said, ESG has a time element to it, which a lot of people tend to forget because it's always like company reported data. No, there's a time element that needs to think about. As you know, we just need to innovate, it's sort of progress, understand how is the consumer trend changing and how is the company really progressing. So there's a qualitative way of looking at this more than a quantitative way. And the only way that the quantitative way to look at this is really look at any sort of fines or charges or taxes that is associated to it that will not be able to pass on to the consumer.
Yeah, I think one thing that would be an option is, I mean, with the technology we have that we have now, we have some, without a lot of work, we have some ability to trace supply chains, right? It's not exact, it's not always perfect, but we do have the ability to have a supply chain sort of bird's eye view. And then we could say, okay, Nestle is purchasing from one of these 11 companies. How are their financials intersected around that product set, around those SKUs? And that would be a way of thinking around recyclability and reuse and reduction of impact. I think it's, you know, one thing is for a corporation to have a policy, right? But then it's hard for corporations to always enact policies at an executive level, where the innovation may be occurring, you know, on a shop manager floor. Do you have any thoughts on that, Don? What would you tell investors to what type of policy would you want an investor to have? And just for disclosure, I in a previous life I was in managing funds, and I approached Don with some thoughts on this.
Now you're gonna see if I can remember it.
Yeah, infamous meeting 6-7 years ago. So
So, I mean, like Justin said, I mean, like carbon. So companies are making very assertive, aggressive comments on being carbon neutral by 2040, 2050, you know, or net positive or whatever. And so the first things you look like, and have you set a, you know, aspirational goals that, and then, you know, how is your board and your senior leadership engaged in this? Is it part of what you disclose on key materiality things in your financial reporting? Is it clear that the board and the senior leadership has ownership of driving solutions? So at a governance level, I think those are the first things you want to look at. Then you want to look at, you know, do you have any kind of plan on how you would get there? You know, and for a lot of us, there was, we can get to X a commitment, and that we need some like new discovery or something that's going to get us finally to achieving, if it was set up as an aspirational goal. But you've got some kind of thing that, you know, at a regular basis, whether it's annually or stuff, the company is assessing, are we on track? Are we making progress to where those commitments are, that we're going to successfully achieve those commitments? And so understanding, are companies truly invested in achieving these? Or was it easy to make some big goal and then say, well, that's 10 years from now, we'll worry about it closer to that 10 years.
I mean, it makes me think of Danone's recent announcement, Don, where they're tying some portion of executive compensation to a set of outcomes, right? And
that's a good way to get attention in a company, is that part of your compensation is linked to making progress on a goal. Yeah,
it's interesting. So Justin, what do we do with this segmented and market? I mean, on those top 11 companies, there's one large cap, a couple mid cap, majority are small cap, and there's even a micro cap. And for those who are not familiar with the phrase micro cap, that's defined as $300 million or less in market capitalization. So from a portfolio management perspective, the companies don't necessarily sit inside one cap structure, right? One cap bucket. You know, how would we manage portfolio risk against the meta-level legislative risks and environmental risks and corporate buyer risks when you have a very diverse set of plastic producers, manufacturers?
Well, it's the same thing as you sort of look at company outlook, given the changes of demand, and how is the company innovating or position themselves? Because what you don't want as investor is to invest in the next Kodak and any of these companies that do not innovate or aware of the outlook, and or still want to stick to their so-called conviction of staying in the same line of business, may end up being in a sort of Kodak situation. So I think that's what we are trying to avoid as investors. And look, it's also market consolidation as well, because like has been mentioned earlier by Helen and Dawn, right? Plastic will stay and they will still be needed. So, you know, but there'll be consolidation in terms of cost, and it may not be cost effective anymore because less and less people are using it, or they want more high quality grade, or their process may not be that efficient. Then somebody else will take over. So these are all the things that need to be considered looking at all these companies across the different market caps.
Yeah, it'd be interesting to see how Amcor's strategy, which is one of the top 11 companies, has changed, and its ability to measure, monitor, and manage it towards its environmental risk goals, given its recent M&A activity. You know, the company's basically doubled in size, 18 months to 24 months ago. What would we do? How would we consider impacting? This is another question that's come in. Really good questions. How do we consider impacting debt covenants regarding, if you have a general obligation bond for one of these companies, and is there a way you could see, Justin, that we would impact the debt covenants itself to address these environmental and legislative risks?
I think it creates this challenge. I mean, this is where the so-called sustainable bonds and sort of environment or social type bonds comes in place. It has a place because you almost have the right legal structure and the framework that has been established to pin some of these companies into this.
Mm-hmm.
And for normal debt, you can sort of put it in there, but again, the framework structure is not there to actually force the investors to do this. And there's not much aspiration for companies to do this as well if it's not a different type of bond. So it's almost like the question from a corporate issuing bond is, where can I issue bond that will give, would I get the most value for money? And then for investors, you almost want to go and see which are the ones that has the higher yield when the bonds are issued. So as corporates issue bonds, I mean, the reason why you got such a huge uprising of issuing sustainable bonds and green bonds and social bonds recently is A, the framework is more established, B, there's a huge investor appetite. So I think with more and more investors' appetite into this type of bonds, corporates will start to go into this space and start to get some of these things written down in the covenants. Now, covenants aside, I think back to the point I mentioned early on, if company has made pledges into some of these so drastic measures, they should put this in their annual report, not the glossy green tree type sustainability report, but actual annual report. Because if it's so important to your company, why is it outside your annual report? Why is it not part of your corporate strategy? And if it's part of a corporate strategy, how does it tie to remuneration of your executive? Not only your CEO, but your executive and management. How does all this tie in? And then share with us your challenges. And then finally, as investors, back to the point I said early on, hold the companies liable to it. Because like I say, if a company doesn't deliver the dividend yield or their growth that they say, you spend hours as an analyst to quiz them again through every single number. So why are we not holding some of these facts into whole company liability?
No, I think it's very interesting. It was so striking to go through the 3,774 reports and see the word oceans, effectively not mentioned at all, when, there is a growing and very significant and public and widespread set of commentary around oceans and plastics. And how is that not reported? It's in these regulatory filings and these annual reports by these companies. It's not an exact process on how one screens, but it still was just very surprising. So we have another question here, Don. The individual writes, what does 2023 look like in the EU? Do you have any thoughts on that after the new policies are enacted? And they also write another question. Tell us, do you think extended producer responsibility, where the plastic packaging, containers and packaging companies themselves are responsible for the environmental and health risks of the product, do you think that will grow and become more standardized around the world?
So I will preface this by saying I am not an expert on the EU since I live in the United States. Okay. But, assuming that, the regulations actually get implemented at the country level, like the EU is assuming to, I think I've read that it's not one uniform. Each country is being able to kind of implement the way that they see fit. I'd like to think there's going to be a lot of innovation going on to respond in different places, and hopefully some learnings going on at the country level on our approach wasn't as effective as some other countries. How do we tweak ours so that we can get, the same kind of developments or change going on that ultimately gets to the EU aspiration of where to be in 2023. The great thing about the private sector is they are very innovative. Lots of amazing ideas are out there. The challenge is getting them funded and being able to bring them to scale. And I think that is how do you actually going to help each of these countries help get some really creative, interesting approaches up so that they can be piloted and, assuming they work, start moving up to scale. So,
It makes a lot of sense. So we're coming to the end of our meeting today and our presentation. It's 2025, and each of you have a minute to explain where we're at. in our, you know, it's 4 years from now. What's happened? Justin, do you want to go ahead, please?
Me first. Okay. I think about 2025, like I said earlier on, I think I like corporates to actually, at least we made some good progress in terms of dealing with these. I'd like to also to have the alternative to the conventional plastics that we have. And corporates are actually transparent. Not everyone may be able to meet their targets, but at least being transparent about it and help us have a level playing field to assess these companies.
Okay. Helen, where do you think we'll be in 2025?
So I think certain markets, regulation will have pulled us along, if not pushed us along the road in terms of progressing. But I think industry will have made a major step forward in achieving more circularity in resources, not just through traditional methods of, as we know, mechanical, but I think we'll be in a much more progressed situation in terms of the alternatives. So chemical recycling, bio-based, all these other aspects that are there. I think innovation will have come through because the realization that we couldn't do it all just the one way. So I think there will be change. It will be progressed. We may not have hit the targets, but we'll be on that road for sure.
Excellent. And Dawn, last word for you, please.
thanks. I would go along. I think innovation is going to have made a lot of progress. I think in 2025, it's still going to look pretty messy because you're going to have different approaches going on in different places. We're still going to be learning a lot on everything from how do you innovate at, all along that supply chain to how do you really engage consumers to being part of this and owning it and driving to participate actively in a circular economy that gets all the plastics back where they need to be. But I think if we can open it up and drive through some regulatory things, opportunities for innovation, we could be looking at lots of really cool ideas.
Yeah, well, great. For my 2 cents, let's hope that the investors are not facing $6 billion of unrealized gains at risk. Of course, I'm going to say that as a quant. So, well, thank you all very, very much. I really appreciate your time, Justin, Helen, and Dawn. And so a virtual finger snap and thank you to the three of you very much. And I hope you have a wonderful day. And if we, as questions come in, I will collate them and circulate them to the three of you too. Thank you very, very much. And thank you, Planet Tracker, for our event today.